Let's start with the agro commodities today, where the sugar futures were trading water on Wednesday as expectations that the government would decontrol the sugar industry outweighed higher supplies and tepid demand into the markets. There you have 0.5% of a decline coming in today. The chana futures in the meanwhile rose on lower level buying, though the arrivals from the new season crop and prospects of a higher production capped the gains there. In the edible oil space, then you had the soybean futures trading slightly on the higher side, but the soy oil futures declined to their lowest level in last 4 months on ample supplies of the edible oil and as the prices of palm oil corrected in the overseas market. You have seen a bit of a decline coming into the rapeseed as well, following losses in the world market and on the estimated rise in the rapeseed production. To spices, where the turmeric futures have hit a contract high for a second straight day into the markets there, driven by strong demand from the northern India and estimates of lower output. Pepper futures were up, tracking firm cues from spot markets amid thin supplies and lack of skilled workers delaying harvest there. Jeera also was trading up on some export demand, though the rising supplies from the new crop and expectations of higher output weighed onto the sentiment there. We keep the focus going on with the agro commodity space, and joining us on the show now is Praveen Dongre. He's chairman and Indian Pulses and Grains Association. He joins us now on the show. Mr. Dongre, hi, welcome to the show. There has been a decline in prices and pulses from the kind of highs that we saw in the previous year. Where do you see the prices heading now?
Well, there are two reasons. The world has seen good crops at all origins, and the Indian crops also showed a rebound in production. So prices have been stable and range-bound over the last year.
Mr. Dongre, the other concern really has been the drought situation in Maharashtra and a couple of other states as well. The impact on the crops, how do you see it for pulses and the other crops as well?
The situation would have got even more critical than it is currently, but the monsoons towards the October and November salvaged the situation to some extent. We believe that the main effect has been on the cotton crop and the sugarcane crop, both of which have dropped by about 10 to 12%. On the pulses front, the tuar crop has dropped by about 30% in some parts of the country and about 8 to 10% in some parts of Maharashtra. Soybeans and corn, which are more resilient, are more or less unchanged.
Also, what's your view coming in now for the imports of pulses and the pricing crop size has reduced larger imports? How was the expectation on that one as well?
Here on, there has been a serious impact on two pulses in particular, tuar and masoor in India. The crop size has reduced drastically, but fortunately at the origin, overseas in countries, the supply situation is adequate, and we will see larger supplies and larger imports of masoor or red lentils, as you may call it, in the international markets, and tuar or pigeon peas, as we call it in the international market. So we expect larger imports of these two commodities. Lentils could be imported to as high as 500,000 tons this year.
Mr. Dongre, we are talking about lower, sowing this time around and higher supplies coming into the markets as well, higher imports as well perhaps. But with the food security bill happening, do you see any procuring coming in for pulses as well?
We do not see any procurement happening in pulses. It is very essential that the government starts a procurement and a price support system in pulses. Higher pulses will only attract higher acreage. Otherwise, we will see that the pulses will be a crop of the last choice for the farmers. So it is important that the government starts procurement under the MSP prices that they announce, rather than just announce prices which then have only a psychological effect but no real-time effect. High prices will only increase the size of the crop in the country.
Sure, fair point, Mr. Dongre. And one last question to you now. What's your sense now coming in for the pulses prices for the rest of 2013?
We believe the pulses prices will remain stable. We believe that certain pulses like pigeon peas and lentils or masoor have the potential of going up, and probably towards the end of the season, chana will find support. Otherwise, overall, the pulses prices will be range bound and quite stable.
All right, stable prices, but Chana can actually see some gains coming in. Mr. Dongre, thank you so much for joining us with your sense on all of those pulses and, of course, the crop situation in India. Let's also get in then Vijay Bamwani, who's author and CEO of ESPLindia.com. Vijay, hi, welcome. What's your sense coming in for a lot of these crops now, especially Chana prices, where we've seen 2% of gains coming in, and also the finance minister today making a point that the MSP in the last 1 year has doubled than what it has been doing in the many other years?
Manisha, Chana prices rising is not really a surprise because if you remember, I've been talking about the onset of summer pushing agri prices higher, and this is absolutely along expected lines. Although the rally, I must admit, has come a little earlier than I would have expected. I was frankly expecting prices to test 3275 or maybe 3300 before rising, but that's not really happened. Having said that, I think in spite of the fact that MSP prices have seen a very sharp rally in the last 2 or 3 calendar years, I would still maintain my view, and as a matter of fact, I would stick my neck out and say that agri-commodities are the best place in terms of traders who are seeking medium to long-term capital appreciation, irrespective of the overly bullish cost of carry paid by the Indian futures traders. I think Chana prices are headed over a period of time. Of course, this is not current future series outlook. Over a period of 4 to 7 months' time, I would be very surprised to see Chana prices not testing 4,000 rupees. So I think the summer is likely to be a period when food price inflation is likely to go significantly higher. I would be bullish on all agri-commodities almost, barring maybe edible oils and a few scattered counters here and there.